Okay, so today we're going to be doing top to bottom analysis on Amazon stocks. That's its premium. So there's not a lot of relevant information on this level after all. There's already a zone here. It's very, very clear. As usual, we're marking out our zones and our trend lines on the highest time frames that we can. Funny how okay. Monthly trend line. It's clearly a zone around here. From about, you can see that from this price came and touches again before touching like this. So that's clearly a zone there. Both of these are valid trend lines. Okay, so now let's go down to the weekly time frame and see what zones that we can find. Okay, there's a zone here. Excuse me. And there's a zone. Wow. There's a zone here. You can see that price bounced off of it the first time, bounced off it the second time, came here, bounced off of it twice more before pressing through, and then still bounced off of it here, then bounced off of it here, and even still made a small touch on the level before coming up here. So that this level, this zone, it's a very, very valid zone. Let's see what other zones that we can find. And finally there's a zone here. Probably these are the last one I'll mark out. No, not the last one I'll mark it on the weekly probably. You can see that price has rejected off of this level, not just once. You can see that price has rejected off of this level, not just once. And although price broke through this level here, price still came back, showed it some respect, and it's now trying to break through again. So this one is still very valid. On a bit of a side note, you can actually see that this market structure here, impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive. But this is the weekly time frame, which is too high. So we pay more attention to the daily time frame because let's leave it, sure. There's no need to big. Okay, so now that I'm on the daily time frame, let's try and mark out some zones. You can see a zone around here. then there's another zone about here. And then we can see that our market structure looks like this: impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive, correctional. So we're now expecting a new impulsive move. So let's mark this out. So our market structure. You can see that between July 2025 to the present. So between July 2025 and October 2025, price was stuck in a range. Price broke out but then returned back. And then there's also a trend line here. Let's switch to gray. It's our daily trend line. You can see 3 touches on this trend line. So what we do next is we go down to the H4 time frame, and then we see if there are any patterns that appear right before price switches from a correctional move to an impulsive move on the daily time frame. Of course, this is usually easier to do on currency pairs and metals because stocks always have so much slippage. But you can see a W pattern here. You can see, especially relying on this W pattern, you can't really see it. Especially relying on this line chart, you can see a W pattern here. And you can see another one here, although it's much less valid. And when you have W patterns that appear side by side, there's always a great relevance to them. This is a head and shoulders pattern. It does not fall in line with the W pattern at all. Here we can see a W pattern, but this is not one of our points of interest, but this is a W pattern here. And here we have it. It's a W pattern here. That's our feet. There's a W pattern here. And it's very evident on the line chart. So that means that we should be expecting a long trade from here. Impulsive, correctional, impulsive. Our stop should be somewhere around here. And then our expectation should be something like this. We should actually be expecting it to go higher because, you know, if the trend is still strong, it's pretty high. So we expect it to break this high and go higher. Well, we'll just put our expectation on the barest minimum. So yeah, that's basically it.